President Trump is celebrating some big economic wins as his critics walk back their inaccurate claims that his tariffs would tank the economy by now. The U.S. economy actually roared back in the second quarter, growing at an annualized 3% after contracting in Q1. That prompted President Trump to take to Truth Social, calling on the Fed Chair Jerome Powell to cut interest rates. But the Fed didn't budge, holding rates steady at 4.25% to 4.5%. Joining us now, Ed Siddell, CEO and Chief Investment Advisor at EGSI Financial. Ed, good to have you back. We'll get to the Fed not cutting rates today in a moment. But first, the economy is flexing some serious muscle, shaking off the doom and gloom from anti-Trump tariff critics who called the president taco. Remember that? Trump always chickens out. That's what it stands for.
That's right.
Boy, were they wrong. GDP growth, billions in tariff income, trade deals, consumer confidence, markets climbing, inflation at 2.7%, way down from the 9% peak under Biden. That's just to name a few. What does this say about the true health of the economy?
Well, we believe that the economy is strong. We were saying early on in the year that we were expecting GDP starting in the third quarter to be at 3%, and we hit that goal early. Honestly, these trade talks, some of the deals that he has made from, well, first of all, let's look at Japan. To be able to receive the amount of funding that we're going to have in a fund in which the U.S. is going to control the investments and we receive 90% of the profits, and Japan is happy with that. We look at the trade deal with the EU. So these are the things that are going to continue to benefit Americans as far as jobs and the economy going forward. The other thing that we have to look at is we've already received $150 billion in tariffs. The CBO, who always underscores and undercuts the amount of revenue that we're receiving, has already stated that they're anticipating in excess of $10 trillion in revenues from tariffs over the next 10 years. So I think we're just at the beginning of the upturn, not only in the economy, but in the market. So, as far as a bull market, we're all in.
Okay, you just saw Howard Lutnick tout, those economic numbers as well. Now we just need rates to come down, interest rates to come down, right, so Americans can pay off debt, afford to buy a house again, refinance their house maybe. Well, the president's been pressuring the Fed chair to cut rates. You know this. We all know this. You said you weren't surprised that the Fed did not cut rates today. Why is that?
Well, a couple things. I mean, we believe that the Feds, first of all, they were late to the game when it came to increasing rates. Remember, inflation is transitory. They kept pushing it off, and that really caused inflation to run rampant. And that's why we hit inflation at a 40-year high. When we look at what they're doing right now, they're doing the same thing on the opposite side of the coin. They're just holding steady. And honestly, when you see two of the 11 Board of Governors have a public dissent in the vote, I mean, we haven't seen that in decades. So that's telling everyone, if we're looking at the bond market, that they should start to lower rates. And honestly, when you look at the press conference, when they did the tour of the Federal Reserve and the renovations, honestly, we believe that, Powell's feelings and pride got hurt. And I think that that's a big reason why he's not moving on rates. We also think that they're going to have to lower rates starting in September, 25 basis points, and we'll probably see a total of 50 basis point cut this year.
Wow. Okay. That's something to look forward to. As soon as next month, you're expecting a cut, and you're not alone. Is this the start of the golden age President Trump talks about, or do you think the best is yet to come?
The best is yet to come. Again, we believe, so first of all, there's over $5 trillion of cash sitting on the sidelines. So as the economy starts to boom, people start getting confidence. Some of these large hedge funds and investors, as we start seeing that cash come back into the markets, we're going to see a huge boom, not only in the markets, but in the economy and growth all the way across the board, from small caps, all the way continuing into the tech sector.
It's looking bright. Ed Siddell, CEO and Chief Investment Advisor at EGSI Financial. Appreciate your time today, as always.
Thanks for having me back.
You got it.